The bottom line is some of my Bloomberg colleagues are shockingly bearish. I haven't seen this before.
Mike McGlone, who is the senior commodity strategist at Bloomberg Intelligence, just gave a chilling warning to investors.
What you see in orange, that's a Bitcoin-specific driver index set up by a bunch of real smart PhD people at Bloomberg.
Giving his updated warning on recession risks, fears of deflation, and of course, if trend continues, what this means for Bitcoin based on the data. This is a 3-minute clip that I pulled from an over 30-minute conversation on the Scott Melker YouTube channel, full link down below. And as I share with you this clip, I'll stop and start and we'll react along the way. Click subscribe to Altcoin Daily for an edge investing in crypto. It costs you nothing, it's completely free. Click subscribe and let's start.
Bottom line is some of my Bloomberg colleagues are shockingly bearish. I haven't seen this before. So for instance, Gina Martin Adams, our equity team, thinks it's potentially going to have a recession, which means fair value for the S&P 500 is 4,000. Now that's not a big deal, but it's a 1/3 correction. And I want to point out just a few charts if I can as I go through some of my wrap here, just for a few minutes.
So it is important to understand that this data from Bloomberg Intelligence is based on their best guess projection that the S&P 500 is going back to 4,000. On one hand, that's nothing because we were just there a few years ago. On the other hand, that's everything because a correction of that magnitude would drag down risk assets so much more. But understand, as Mike McGlone gives his Bitcoin forecast that is based on Bloomberg Intelligence's hypothesis, that the S&P is going to 4,000 much lower.
The key thing that's happening is this top chart here. That's the S&P 500 divided by the rest of the world. That number here, that level here we were just a few months ago was the highest ever. I just take it from 2005 and I show it just relative to the MSCI ex-US index. This trend line has been in place for 20 years. We are breaking below it. So that's a deflationary force. Same time, this is US stock market cap to GDP. It was 2 times GDP just a few months ago. There's only 2 times in history we've had that, significant times in major markets. 1929 US, 1989 in Japan. I was somewhat involved in 1980 in Japan working for Japanese firms. They're still imploding. At the same time, this is deflationary forces just catching up to what's happening. Crude oil is already heading lower and Chinese government bonds yields are already heading lower. Again, this is me. I was trading these in Japan 30 years ago. The world is tilting towards a deflation. We have a significant reason to do it now.
Now, maybe you're saying, why would the world be going deflationary? We have tariffs. They're increasing prices. That's a tax on trade. How could we go deflationary? Well, it's because both can be true. Because of the tax, the world is trading less. We're seeing major deflation because the world is choosing to hunker down and prepare for the worst. And what that means for gold and for Bitcoin.
The thing I want to point out is what's really changed is the companions have broke up. This is gold heading higher, and what was all heading up together was the S&P 500, Bloomberg Galaxy Crypto Index, and the S&P 500 are heading lower. This is what people have learned the hard way who bought all those ETFs. They are learning so far that they bought leveraged beta and not digital gold. That's a fact what's happening. What stops it is a key thing I want to point out. This is something I published on yesterday. One of the best indicators that's worked for hundreds of years, the gold to silver ratio. It's above 100. I published this yesterday, got a lot of hits on it, and just pointed out what's significant about this. It's a sign of always spikes, almost always gets spikes when you have recessions. That's what you see magenta. It's breaking out higher. One thing that's notable, see this chart? I thought, Scott, you and Gareth would like this. That's unemployment. It looks like a bull market breakout to me if you look at it as a chart. That's unemployment rate. It's only, we talked about this 2 years ago. That's going to go to 6%. And that to me is what happened. It's a delayed reaction. So I just want to get a little bit into Bitcoin and then I'll leave it there and I'm sure we'll have a lot to talk about.
And that brings us to Bitcoin. What Mike McGlone and Bloomberg Intelligence think about the future projections of Bitcoin in 2025. By the way, anybody that wants to hang out in Vegas, my brother and I are speaking at Bitcoin Conference 2025. Come hang with us and use code Altcoin Daily for 10% off your ticket. Link down below. And here's Mike McGlone's outlook for Bitcoin in 2025 based off of Bitcoin's 200-week moving average, which we've returned to in bear markets before.
People have been pushing back a little bit on me and might just point how Bitcoin's going to have a normal mean reversion. I'm pointing out here is 200-week moving averages of Bitcoin and the S&P 500. They're basically the same. They're still heading higher. It's still a bull market, and they're just heading back to those moving averages. Gets where they are right now. It's a Bitcoin to S&P 500 ratio about 10-1. That's the about Bitcoin 200 week. I'm sorry, this is 200 week moving average is about 4,600, and the 200 week moving average in S&P 500 is about 4,600. Our team in equity says the fair value for S&P 500 in a recession is 4,000. So this is part of my reversion. They trade together. They're the same chart. And then I've also enjoyed how people really push back in my call for 10,000. I'm really sorry. That's well below their profit market. But this is one thing you have to get for someone who's completely unbiased in markets. I've done this for decades and just point out what usually happens. So if you look at the S&P 500 overlaid with Bitcoin, on an autocorrelated chart, this is not me this is just the autocorrelation market. If the S&P 500 gets to 4,000, what I show you here is the high volume price. This is market profile. I used to trade by these things, made a lot of money, lost a lot of money trading this. It just shows since 2017, which was the significant year for Bitcoin. That's when futures were launched. It's when people like me could start leveraging. The high volume price is below 10,000. The average price from 2019 is below 10,000. Normal reversion means unless that crypto can way outperform the stock market, which notably it has been, Scott's been pointing out a lot lately, it has to. So I'll end with this one chart. This is not me again. I'm trying to play a little plausible deniability with my outlook, which is just normal reversion. What you see in orange, that's a Bitcoin specific driver index set up by a bunch of real smart PhD people at Bloomberg. I don't even know how they did it. I read it. It's overlay with the Bitcoin to gold ratio. It trades tick for tick until Trump was elected. Right now, with Bitcoin gold about 25, it shows fair value is below 17. That's just based on the model.
So again, just to summarize here, you're saying that Bitcoin could go down. If the S&P goes to 4,000, you could be looking at a $10,000 Bitcoin, correct?
Well, that's based on past performance. That's exactly where it was. The last time it was around 4,000. Bitcoin was around that level.
Wow. So here's my take. If you were to ask me, can the S&P 500 get back to 4,000 in worst case scenario, which again would only be where it was from a few years ago, I would say, yeah, worst case scenario, probably, which in the grand scheme of things, to me, is only a big deal if you just got in the market, in the last few years. If you've been in the market since the pandemic, or if you've been in the market since 2016, 2018, that's not a big deal. It's bad, but it's not unbelievable. Yet, if you were to ask me, can the Bitcoin price return to 10K, which is where it was for years in 2018, 2019, a little bit in 2020? I'd say anything is possible, and maybe this is just my bias talking, but much, much, much less likely. I want you to notice that the stock market already corrected over 10%, pretty significant in stock market terms, and Bitcoin didn't even retest old all-time highs. So that makes me think, if the S&P 500 were to correct, maybe down to 4.8, 4.7, that may break old all-time highs for Bitcoin. Then we may get that correction, breaking $69,000. Maybe we'd get it as low as the high $40,000 Bitcoin. Again, this is major recession times globally. Then this would be very possible. And then assuming Bloomberg intelligence is 100% right, and we get an S&P correction, another third, down to 4,000 S&P 500, then I think it's very possible. To me, worst case scenario is Bitcoin retraces back in the $20,000 range, because again, we have huge support dating back for years at that price level. And this would be my global depression prediction. But again, maybe this is just my bias talking, but I think you can argue based on earnings, based on market cap to earnings, that a lot of the S&P was overvalued these last few years. Also, especially if earnings decrease quarter after quarter, then that would make the fundamentals for stocks worse. The fundamentals for Bitcoin since $20,000, but especially since $69,000, clearly have gotten so much better. Also, just something to keep in mind, a few weeks ago when Trump issued the official Liberation Day reciprocal tariffs, we saw max fear for Bitcoin that we had ever seen before, max fear in the market. and Bitcoin still put in a higher low. Bitcoin will continue to put in a higher low unless we break $73,000, really $69,000. Thus far, we haven't. And if nothing else, global liquidity continues to rise. Global liquidity is truly at an all-time high right now, rising steeply, and that's more than the United States. This is because other countries, not the United States, but other countries are lowering rates. They're quantitative easing their economies. They're trying. Bitcoin thrives in that type of environment. And if I could leave you with one piece of altcoin news, because this channel is called Altcoin Daily, you subscribe to stay in the know about which projects continue to build even through bearish times. With Xborg, they're introducing shops, credits, and loot boxes. So just as a reminder on what Xborg is, and by the way, they just made one of CoinPaprika's spicy projects, but Xborg is revolutionizing gaming with on-chain player identities that store gaming achievements and social data. Meaning if you're a gamer, no matter what aspect, which platform, which aspect of gaming you're utilizing, different games, you can own your own player identity. That's valuable to own your own data and identity. Their community-first platform lets players own a stake in the protocol with no VC funding, putting gamers at the center of value creation. I like that. And the news today is this: introducing shops, credits, and loot boxes, which means you can earn credits by completing quests, you can spend credits in the shop, and win awesome prizes. Claim your free credit and start winning. I'll link this down below if anybody is bullish on crypto gaming and wants to take advantage. And in their own words, this is the first iteration of our shop feature and our first step in app monetization for our fan apps. It will level up over time with new features like purchasing credits with Xborg or card payments via Stripe. And if you take advantage today, all new signups will receive a welcome gift. Holders of XBG token, Xborg NFTs, and users who are active in our community app and Discord will receive rewards regularly. Cool to see the growth. If you've made it this far in today's video, comment grape with a G, comment down below if you've made it, and give me your honest Bitcoin forecast if the worst should happen, if a depression is upon us. Is 10K realistic in your mind? Checking the comments now.